it's a very sci-fi process. I feel that they are injecting the worms. They may not be getting the similar valuation now, so that's why the delays. They have not raised for last 2 years.
How they're administering it is in the form of lollipop or spray. So
hello everyone, welcome to another episode of Weekly Digest with Fibonacci X. We are covering week number 27 and 28. We bring you Weekly Digest where we mostly cover early stage, growth stage, and late stage deals, which are venture backed. We try to analyze the logic behind, and we also look at the competitive landscape in that sector. So let's begin for this week. So the first one is Jumbotail. I think Jumbotail is a late stage company. Now they're pretty, I would say, probably doing around roughly 900 crores in revenue. And they may still be loss making, probably, I think, 50 to 100 crores of loss, if I'm not wrong. And this is their Series D. They raised 120 million. They raised from the venture arm of Stan Chartered Bank. And the deal was interesting because they, as part of the deal, they also acquired Solve India, which was backed by Stan Chartered Ventures. And I think they are the sixth unicorn in 2025. So far, we have had five. This is the sixth unicorn of the year, right? Jumbotail is interesting because they have been building around this Kirana model. They have roughly a combined reach of about 500,000 Kirana models and MSMEs across 400 plus cities. And their focus is on now AI native solutions for B2B retail. They also provide credit, supply chain services. And I think they are now, we can say, pan India Kirana platform. That would be safe to say at this point. If I look at their competition, I think we have Udaan, also in the same space. I think we discussed recently in one of the episodes. We also have Moglix, which is kind of doing similar. Well, they are similar but not exactly the same. Jumbotail is around platform for Kirana, while Udaan is for B2B distribution at scale. And Moglix is mostly around industrial supply chain, manufacturing, etc. Um, and Jumbotail, Udaan, and Moglix, all three are unicorns. Moglix is, I think, last they raised around 2022. They are valued at $2.6 billion. The reason they have probably not raised is because they may not be getting the similar valuation now. So that's why the delays. So they have not raised for the last 2 years. Um, and adding to this, if we look at the unicorns for 2025, so we have Netradyne, which is in AI plus safety, fleet safety. We have Porter, which we discussed in the previous episodes, which is intra-city logistics. We have JSW1, which was a spin-off from the JSW group. We have Drools, which is into pet food. Nestle acquired a minority stake in that. And we have JustPay, which is fintech infra. So these are five, and then the new one we are adding is Jumbotail. So these are the six companies. But uh, interesting spaces. So the company, we have mobility as one of the themes in all these unicorns. So we have Jumbotail also kind of a marketplace, not in the B2B, but Porter is mostly intra-city logistics, and Netradyne is fleet safety. So both around Netradyne is backed by SoftBank. So both Netradyne and Porter are around mobility, solving very different problems within the whole ecosystem. And then we have one fintech in the form of JustPay, and we have Rules, which is pet food. So, consumer, fintech, mobility, logistics, e-commerce, I would say. B2B e-commerce. JSW1 platform is B2B e-commerce infra, and Jumbotail is B2B Kirana marketplace. So that's how these six unicorns in 2025 so far are split. No surprises for me. The only surprise for this, not surprise, but interesting fact was this acquisition which they did in form of Solve India, which was more of a B2B commercial lending platform, which was backed by the investor, which is Stanchart Ventures. So they acquired this company, and this investor has put in money into this in the latest round, right? Um, if you look at institutional rounds, there's no surprise. Usually, this is the size of the round, and nothing which jumps out. I think probably they will be thinking about IPO at some point. I'm not sure if it is happening this year or next year, but IPO will be something which will be on the card. Similar to, I think, Udaan also similarly going for IPO because the late stage investors will be probably looking for liquidity event as economy also stabilizes and gets back on track.
So the next startup that got funding is Loopworm, and Loopworm belongs to a very niche industry, which is uh, I would call it animal feed, but it's basically insect and animal protein, as well as global recombinant protein. So these kind of proteins, right? I mean, we all know that nowadays insects are being used as cattle feed and cattle fodders. They're also being processed to create proteins to be used in protein powders, wheys, and other human food also. Now, most what the usual process of creating this kind of animal protein, which is used in fodders and across many industries such as poultry, aquaculture for feed to the chickens as well as fishes that have been bred, as well as other industries that require creating industrial enzymes, vaccines, and diagnostics. So they're used as input into these kind of products, right? Now they're usually made in normal labs, and these labs are high cost. They are usually done through yeast or bacterial growth in steel canisters, large steel canisters, and these take time and they're quite costly. Now, what Loopworm has done here, it's a very sci-fi process. I feel that they are injecting the worms with a certain kind of viruses that coded to create and release protein, the silkworms, right? They're silkworms basically, and they release protein and they synthesize the protein to create into various. Right now, they're doing for feeds, animal feeds, because it's low quality protein, but they're using the revenue that they're selling. Right now, I think last month there was a Facebook or LinkedIn feed that posted that almost 30 metric tons of feed was sent to aquaculture industries. So they're using the revenue and repumping that money into R&D to create recombinant protein and various kind of proteins that will be used for even other industries. For example, vaccines and diagnostics and industrial enzymes, right? Now, interestingly, the founder are IIT Roorkee alumni, Ankit, Alok, and Abhi Gauri. Ankit is focused more on R&D and business development, while Abhi is focused on uh, I think operations, socials operations, as well as the finances. So more of the admin and operations side. These two both have backgrounds in sustainability. They have done previous startups also, if you look at the LinkedIn profiles, and they also have a bit of, I would say, experience in supply chain management. So what they understood is that there is a growing market for animal proteins, especially insect proteins, that is being used as input into various industries out there. And it's a growing industry. The industry right now globally, I would say, is around roughly between around $1.5 billion, and it's growing at a almost 20 to 25 percentage CAGR, right? That is huge growth. And in India, that protein market is very small. It's few $1 million, but it's rapidly growing. Obviously, there's stigma around using protein, animal protein, insect protein in feeds, but that I think will overcome over a period of time. However, the startup is not something that is being funded for the first time. They had a grant and R&D from the multiple places. In September 2022, they got almost $3.4 million of seed round led by Omnivore and Waterbridge. And Waterbridge led this round in 2025 July last month and this month to give almost $3.25 million of pre-series A round. Right. And the valuation, let me just check once. I'm not sure about the valuation. Yeah, but their target is to create high quality protein from silkworms. And right now they're feeding it to all the poultry aquaculture industry as animal feed for breeding and all. But they want to enter high, I think, value industry like vaccines and diagnostics over time. And they are doing good sales. It's a growing market right now. Yeah, so and it's very export-led model also. They're exporting it to other countries outside India right now heavily. And there are other players globally that are doing it, and they are very successful. For example, I think Beta Match from USA, which is a mealworm platform. They're using it, and the other companies that are using it for pet focused animal feed. So they might also enter the pet industry as an input for proteins and all. I think that's about Loopworm. I hope they grow, and I think they'll grow. It's an industry that will keep growing in the future, and very interesting industry to look into.
Okay. So the next startup we'll talk about is Smartworks. For the previous week, that was the only late stage deal which happened. That was 20 million. And what Smartworks does is that it manages workplace solutions which are leased, fully fitted office buildings or campuses and then sublets them to enterprises. How it is different than other co-working models is rather than targeting freelancers, startups, SMEs, they are targeting on big ticket corporate clients and managing this different format called campus style. In what they do is the entire building or the campus is dedicated to one or few larger enterprises like Fortune 500 companies. So that is what they are targeting at rather than the traditional startup space, which other co-working spaces like Office, WeWork are targeting. Their focus is on tier 2 cities and beyond. So let's say for example in Ahmedabad they are managing 56,000 square feet. In Jaipur they are managing 170,000 square feet facility and have further expanded to Lucknow, Kochi, Coimbatore and trying to expand their infrastructure for these tier 2 cities as well. I think one of the smartest moves they have made is that they have set up their own tech subsidiary as well, that is Smartworks Technology Services. What most office space providers use tech is to manage bookings, access, or maybe billing, but they have built internal tools to run their spaces more efficiently, like they are doing space planning, tenant experiences, security, utilities, and they are not just using this tech for themselves, they are planning to sell this tech to others, landlords, developers, or even competitors. So it is not just a real estate business, but on top of that, they are also building a software business. And they are majorly funded by Tata Mutual Fund, Aditya Birla Sun Life, Access Mutual Fund, SBI General Insurance. And I think they are coming at a very right time where WeWork is also going for an IPO right now. So I think the timing is correct. And also for 2022, 2023, that was the time when the revenue spiked the highest. That was from 390 crores to 750 crore, where their focus was totally on this campus model and their expansion to tier 2 cities. And they are further targeting on setting up in more next 500 cities. So I think that is one part which is different from other co-working spaces.
So the next one we'll talk about is Okera. Okera is a player in the lab-grown diamond space, and they raised 15 million in Series B, led by PKXV. And existing investors include Fireside, Sparrow, Pratt Ventures, and Altaria Capital. There, I think the next step for them is retail expansion. They're planning. They, I think, have roughly 10 to 15 stores. I think 13 to be precise in Bangalore, NCR, and Hyderabad. And now they want to strengthen their omni-channel capabilities. And their goal is to reach 1,000 crores in revenue in the next 5 to 7 years. And previously, they had raised 26 crores, roughly 3.2 billion. And last valuation was around 15 million. And if you look at this space, there is a bigger player, let's say Jiva, which is well funded. They have done Series C. So far, they have raised 530 crores, roughly 61 million in total. So it's a growth stage company. Similarly, Limelight has raised lesser money, around 11 million. And Okera is another player which has now raised 15 million. If you look at the market size, I think the market is expected to be around um, as of now around 2 billion and supposed to go 4x, let's say 8 billion around 2030. And the primary drivers are rising affinity or inclination among consumers for affordable fashion, affordable luxury, as we call it. And also the certification in LGD, that system is also becoming mature, enabling greater trust. I think omni-channel is the way to go because offline presence is important when it comes to LGD or any kind of luxury purchase. People want to go in the experience center and to the shop on the high street. They want to experience and they want to touch and feel and speak to someone, right? And other startups have also emerged. So there is Fiona, Jewelbox, etc., etc. I think the challenges for me are twofold. One is how do you overcome cultural preference or natural preference for mine diamonds? How do you position them versus when you compare it to mine diamonds? And long-term acceptance and resale value. Resale to the lesser extent because anyways, if it's a value buyer, they will prefer to buy gold. They will not go and buy diamonds. Diamonds is a frivolous purchase, right? You don't care about resale value because you already have enough money and you want to buy it for memory, for gifting, etc., for significant other or for your own, for yourself. So from the competition point of view, I think the competition will also come from the traditional jewelers. So I wouldn't say brands like Bluestone and Tanishq and others are not going to do lab-grown diamonds. I'm sure they're also looking at it. And innovative startups like Jewelbox, Limelight, Fiona are also the competition. At some point, people like Jiva, Bluestone may acquire the smaller companies which are raising 10, 15 million at this point because those companies are better funded. They have raised, let's say, Jiva has raised around 60, 65 million. And Bluestone is now a public limited company, so they can always raise money at a cheaper rate and acquire smaller players for maybe regional access, maybe omni-channel, maybe complementary channels which they are targeting. So I think that will happen. But I think we are roughly 2 to 4 years away from that because these companies are just setting up. Most of them have 10, 15, 20 stores. But once they reach 40, 50, 100 stores, I think at that point, they can fit into this bigger players portfolio. So I think liquidity events can happen for investors in this space, and the demand is strong because people, when thinking about buying diamonds, the first time buyers, they will be looking at the affordability bit of it as well, right? When comparing it to mine diamonds. So it's an interesting space to watch. A lot of action from a consumer sector perspective in next 4 to 5 years in this space.
Just one question on this. Actually, when the company is like a large company absorbs a smaller company in the same industry, right? Usually, is it a good move to like rebrand it back to the original large company, or do they keep the niche? I mean, they keep the name of the small company intact or the branding intact? Like, what makes more sense from the larger company's perspective, who's absorbing the smaller company? Like, keep the brand name as it is, or like completely change the branding back to the original company?
It can be either, right? Let's take an example of Carrot Lane. Carrot Lane got acquired and it still, I think, operates as Carrot Lane
Yes.
because it appeals to the younger audience, probably.
Mm.
Tata has acquired other brands in
Brands.
jewelry and they are operating them as it is. So it depends on the values and operating principles of the acquiring entity. Tatas have been that way that they acquire a brand and they let it go, right? But it could also be the case where the acquirer wants to absorb it in case in case their operating principles are differently aligned, right? M&A generally should be looked upon as from a skeptical lens always. The chances of it working out are less unless you have experience of post-merger integration. Because then it comes to people, culture, processes. Companies take time to merge, actually. The transaction closes on paper, but post-merger integration process take years and years of work, right? Because then you have to restructure the team, you have to align the values, etc., etc. So I would say, even though it looks a very easy exercise on paper, it is not easy to execute. And to answer your original question, I think both tracks are open. Companies can acquire smaller brands, and it can be a house of brands or an ecosystem which you are creating, or you can also absorb. But neither is easy to do, right? If in the first case, let's say Carrot Lane promoters, maybe they're still there, maybe they have completely liquidated their position. I am assuming they have completely liquidated, or they may have a very small percentage. In that case, also, to imagine a business, to continue to grow a business without the founder's presence, without the ethos of the founder, it is not common because usually jewelry businesses are family driven. Either founders have a background in jewelry, most of them will come from jewelry background. Otherwise, for a new person to build a jewelry business from scratch, it's very rare. Even in case of Limelight, they have taken money from strategic investors, so they have access to knowledge, industry knowledge, and connects, right? So even if you're acquiring a company and you're letting it operate under the original brand name, it is difficult because without the founder to keep the -1, -2 layer at the same level of motivation because they will have loyalty or they will have connection to the founder, etc. So sometimes it's not very easy to align. Yeah.
No, I mean, absolutely true. Recently, I've been working with a lot of companies which were absorbed by a large company and then demerged. And I, not a good experience for a small company because the good products are taken by the larger company and they strip it down to just a basic small company again with struggling piece, I guess. Yep, coming to a new startup that got funded was Serendipity Space. It's one of those startups in deep tech and space tech which have been gaining traction in India. I think for the past 3, 4 weeks that we look at, a lot of deep tech and space tech companies are getting funded, as well as yeah. So this shows a growing momentum, I think, or support, or I would say belief in space tech in India. given the growth of ISRO in the recent years and positioning of India as a strong space agency and a country, it's the government is opening up doors to, as it did for drone tech in 2021, I think, to space tech and deep tech right now in current months. So Serendipity Space, before I get into it, if you have watched the previous videos, you will know about the reducing payload cost. Payload cost is basically per kg cost that is used to go into space, right? It used to be $100,000 in 1980s, and it has reduced by almost 99% to almost below $1,000 with Falcon X of SpaceX. And the Indian companies are also, ISRO is very, very, very efficient when it comes to space launches, right? And Serendipity Space has an MOU with ISRO, and a lot of Indian companies, space tech companies, have MOU with ISRO, especially with space launches, because ISRO is very efficient in terms of money spent as well as timeline with space launch. So yes, coming to Serendipity Space, there are three founders. Antariksh Paricha, who is the CEO. He has a master's in applied physics from Technical University in Munich. Jivitesh, I think, Debata, CTO. He has a master's in computer science. And the chief of space system, the space partner here, is Dr. Monica Ikal. She is ex-NASA, ex-DLR. So they have good team, a very broad range of team. And it's needed because Serendipity Space has raised a pre-seed round, which is undisclosed, from Campus Fund. The fund is going to validate key subsystems of the orbital crystallization unit, which is called Alchemy. Now, what does Serendipity Space do? It's a very unique space tech, which is creating satellites that can manufacture drugs in orbit. And when I read this, I was skeptical. What does it mean, right? Why will someone create drugs or pharma products in orbit? Does it make sense? Apparently it does, because zero gravity creates very finer particles, more regular product, which is better for solubility, which is better for R&D, for high cost, I would say, industries such as oncology and rare diseases. So it's better doing it in space in zero gravity than on Earth. And my natural question was, can't we replicate that on Earth, right? It's difficult. I mean, it's difficult to replicate zero gravity environment and also have the tools to do it. And somehow it makes sense to send the rockets out right now and the orbits and create a space station there for the particular R&D purpose. Conduct the research there, create products, and then ship it back to Earth. That is the stage that we have reached right now, which is very surprising, because a decade ago, when we used to refer it to as Space Race 1, I would say, not Space Race, I think it was called Space 1.0 for private industries, a lot of startups failed. Right now, post 2020, it's called Space 2.0 for private industries, where a lot of space tech startups have gained from the failures of the decade or two that occurred in the private industry. So now these kind of companies, most of them are usually pre-seed in India, the ones we have talked before, the ones we're talking right now. And yes, they have MOUs with ISRO, they have bringing in people from ex-NASA and then trying to build a product. For them, right now, the focus is to develop a small autonomous satellite called Alchemy that can carry proteins or small molecules into orbit, crystallize them in microgravity, create various kind of compounds, and then return them back to Earth safely for further drug development. These fine crystallizations actually are very valuable in the medical industry, right? And the industry is very small, very tiny. It's global. I think space-based manufacturing across all sectors is estimated to be reaching $10 billion over next 5 years. Right now, I think it's almost $1.5 billion, which is very small. But looking at the space at which the industry is growing, I think someone who invests right now into the industry as a VC or a firm is not looking to gain anything in the next 5 to 10 years. It's mainly going into R&D and creating distribution channels, which are used for, I mean, interestingly, a lot of this space tech is being used for Earth applications. For example, the orbits that were supposed to, like, let's say, reach asteroids and scan them, they're used on as a scanner to, like, scan the Earth environments and look at mines. So what a lot of these companies do in this specific industry is they take out an earthly application. For example, geothermal scanning of mines and all. And then if that is successful, then they try to take it out to outer space. For example, a very futuristic scope of like mining asteroids. That's still very light years, not light years, I would say decades away, but that application can be used for Earth itself. Similarly, any NASA that used to go out, NASA tech that used to be used in spacecrafts in 1970s, 80s, eventually trickled down to earthly usage. For example, vacuums. They are NASA-based technologies that came down to earthly uses, right? So a lot of this tech actually trickles down and is being used after a few decades at a very cheap cost for day-to-day usage on Earth also. So this is an industry which may not give out particularly high returns right now. Somehow it trickles down to other industries and is useful to the mankind overall for the growth of humankind, I would say. But right now, as a VC, again, you're putting money into R&D mainly without any solid growth or revenue estimates at the moment. There is some interesting competitive benchmark. A company called Varda Space in USA is already focused and way ahead of Serendipity in terms of the process. They're building orbital factories actually, which manufacture drugs and materials. Right now, they've done some kind of testing, I think this year. It was successful. They're backed by US government. Serendipity, I think, might be backed by the ISRO and Indian government, hopefully. And yes, why does making drug in space make sense, right? Because on Earth, the crystal defects are more frequent. In space, the frequency reduces drastically due to no effect of gravity. So it's like overall, you will have a perfect sphere or perfect kind of structure that you need. Shelf life also improves over there. And speed to clinical trials also apparently improves in space. And once they have this thing, they will be selling it to companies. For example, companies like AstraZeneca are funding space tech companies, right, who go out and are creating basically R&D labs in space. So even the industry knows that the pharma industry knows that there is value in this, and they are funding these kind of companies themselves. So not only AstraZeneca, there are multiple companies. Yes, Amgen, Merck, AstraZeneca, all US companies and German companies are funding these kind of companies worldwide. So very interesting startup. Again, an industry which is growing rapidly and getting funding very aggressively.
So the next startup is something which is very important to our theme as well. That is one of the theme Fibonacci X focuses on is Gen Alpha. So Velopia is one of the startup which has been funded in this sector in the past 2 weeks. They are majorly raised from consumer VCs, that is Fireside, Sharp Ventures, Antler, Arjun Vaidya, and other angel investors. This is their first round, and it has only been 6 months to their operation starting. What this company does is they develop wellness products designed specifically for children. And right now they are only targeting cold and cough issues. That's it. And how they are positioning themselves is somewhere between Ayurveda and modern medicine, and that is for everyday health needs. Maybe they'll further venture into digestion issues as well, but right now they are only providing sprays and lollipops for treating cold and coughs for younger children. Another similar brands which have built in the space have over the past few years is Happy Tum, Wellbeing Nutrition, Timios, Mopeds, What's Up Wellness. But one thing which this WhatsApp Wellness is doing differently is that they are providing gummy bears in the form of supplements, and it is some kind of validation that WhatsApp Wellness has been able to raise a bigger round of 14 crores recently from Unilever Ventures, and their focus has also been on preventive wellness space. But the common building ground between both of these Velopia and WhatsApp Wellness is the way in which they are administering this medicine. So for me, what the unique selling point came to is that they are making it easy for children and convenient for children to have this dosage. Like if you are giving kadha to anyone, any older person or a younger person, it is very difficult to take it, but how they're administering it is in the form of lollipop or spray. So the memory which children have with taking a lollipop stays the same, so it is more of an enjoyable experience for them. And preventive wellness has already been booming up over the past couple of years because the non-communicable diseases are spiking at a very high rate. And what we found out was that preventive wellness market right now is around 110 million, which is a very small size right now. We don't know how much of this is Gen Alpha, but that is the size of overall preventive wellness market right now. And the fact that Velopia is tapping into this familiar habit and happy memories that are associated with having lollipops is pretty interesting. And they are already converting age-old remedies into something kids enjoy, and it makes the adoption for children even better. And for the early stage, there for early stage for the past 2 weeks, this is the only deal which happened in the preventive wellness space. There were total of 38 deals which happened this in the past 2 weeks, out of which 28 were in early stage, and this was the one differentiated brand in preventive wellness for Gen Alpha.
Just a question to both of you. Like, I don't know, like as a kid, right? If you get the experience of having a cold or sickness, and the remedies were like kind of uh, not Gen Alpha type, like it's a shocking type, right? You get something like, I don't know, some cough medicine which is very bitter to taste, right? So as a kid, you develop kind of psychological mm, hatred towards illness, because the quick cure to the illness was also something which is not likable, right? Now, when you create products like lollipops and this thing which is more palatable to the kids, I just wonder, like, if the kids grow up, like, it's got to be counterproductive or not, right? Like, is it a good thing to do in the first place? Secondly, do the kids want to be associated with illness and having a lollipop, and just that is more palatable to them and it cures them? So just wondering, like, if I was having the same experience as a kid, would I be like more or less careful to like avoid sickness? Like I don't know, it's a very deep psychological rooted thing to look into. But do you think it's a good business strategy to like make the solutions for illness more palatable in terms of taste and this thing, senses?
So next startup is again similar, not similar, but very different, but something which has to do with the lifestyle, which is rising level of infertility among adults in India. So we have roughly, I think, 30 to 40 million adults which are who are dealing with fertility issues in India. It's a huge market now. And because it's an emotional issue, a lot of brands are able to monetize on this market, right? So there are different kind of solutions besides IVF. The player which we are discussing is Luma Fertility, which is into full service IVF. They are based out of Mumbai. They have a flagship facility in Bandra, and they want to probably after this round they've raised 4 billion in seed round. They're going into metros like Bangalore, Hyderabad, Pune, Delhi over next 2 years. So they do full service IVF. They do egg freezing. They do pre-conception consultation. They do at home semen testing. So these are their main services. And they're also developing something called, obviously they have to have AI. So they have Luma AI, which is AI-enabled app for 24/7 cycle guidance, medication reminder. Because if you know the IVF process, you know a lot of medication things have to be within that 15, 20, 30 minutes of, it has to be exact. Right? When you go to the clinic, when you have to take the injections and other things, it has to be at the right time, right? So I think those kind of apps can be useful. Like I said, over 30 million couples are facing uh, infertility in India, and it is expected to rise with the urban lifestyle and change in our eating habits, our sleeping patterns. Um, on the demand side, I would say there is a rising preference for transparency and convenience. So, app tracking, virtual assistants, all these things will become uh, very useful for anybody who's going for IVF. I think all of us probably have someone in our extended network who has gone for IVF by now. Uh, I certainly have people who have gone for freezing eggs, which was not common probably even if I roll back, let's say 6, 7 years ago, I didn't know anyone. But now it is common with when I speak to young females that they're talking about freezing their eggs. It's mostly millennials, some Gen Z also. Gen Z, they still don't have the earning capacity, savings, etc., to go for it. But I have certainly overheard some conversations with Gen Z females also about egg freezing. Definitely females who are 30 plus. I know one or two of them in my network who have kept their eggs already. So these kind of clinics will have a role to play in future. Also, the treatment costs are very high, so it can range, I think, easily few lakh rupees if you're going for a treatment like this. Um, and there is a cultural stigma and sensitivity around fertility because, see, having a kid is an emotional issue, right, for people. So there is, it's a very sensitive discussion, right? So there are too many stakeholders, especially in Indian families. There are parents, there are in-laws, there are your friends. So at society level, there are certain expectations. I don't look at having babies at population, large population of India. I think is a positive for us, right? I look at it what we call the demographic dividend. Look at what is happening with China. Right? Now they are struggling because they forced one child policy. So we should be focusing on this if the fertility is falling below 2 at the couple level. I think we should be at least at the replacement level, right? If not more than that, right? And because changing demographics leads to other kind of problems, right? You will have cultural issues, you will have society level issues because the demographics and the mix up of the society is changing. So having healthy population, healthy reproductive or balanced replacement rate at the population level is very important. Again, if young adults can manage their lifestyle, etc., I think bunch of these issues will go away. I know pharma companies, I know Ayurveda companies, I know wellness companies in parallel to full service IVF clinics, which are selling probably 50,000 rupees per visit, right? The pills or the medicines which they're selling. There's nothing wrong with it. There are companies which are backed in the wellness space, focusing on this, backed by venture capital funds, which are probably, again, all of them are now going for brick and mortar consultation centers because it's trust based transaction. It's an emotional sensitive transaction. So before people buy anything from you, they want to visit, they want to speak, they want to talk about clinical trials, they want to see some results, they want to know what are the negatives, harmful effects on their body. So especially particularly females, they would have all these questions. So I'm not surprised. Even Luma is going with the offline model. They may have some AI-enabled online website, apps, etc., for tracking and for reminders, but it has to be offline only. Right? Healthcare is uh, highly dependent on personal care because it's trust-based. Right? You want to meet a doctor because it's you know It's one of those decisions in your life which is going to change your life, right? So it's not like uh, any other product or a service. So you want to meet, you want to talk, you want to see the results, you want to judge the trust. And money is probably secondary in this case, right? People will give you greater money as well. That's not a problem. And even let's say this surrogacy industry is so big in India now, people going to Eastern Europe to have kids through surrogacy. In India, it's regulated by law. So you cannot have surrogacy outside, or you cannot do commercial surrogacy in India. It's regulated, right? For good reasons, because people will exploit it. But people go to Eastern European countries, low income countries, and have commercial surrogacy because they want to have kids and they are having some kind of problem. So there are uh, many interesting downstream effects of rising infertility in India. One of them is these brands. Second of them is population demographic change. Third of them is, let's say, other things which people are experimenting with, which is commercial surrogacy outside India. So all these things are emerging because of uh, infertility, rising infertility. The root cause of that problem is lifestyle changes, our eating habits, our day-to-day stress in our life. I think those are the main causes. So let's see, it's a seed funding, but I would look at it more like a cash flow business only because I think at the clinic level, they will be able to break even very quickly. The only money they need is when they're setting up the clinic in the first city, first 6 to 12 months, maybe some burn. Otherwise, I think in metros, they should be able to uh, have enough people walking in, and if they are able to deliver results, then they should be able to generate enough cash flow. So I don't see it as a cash burn play in even in medium term. Some of these clinics may be bought by private investor backed large healthcare companies, even large chains like Max, Fortis, other larger chains may be interested in acquiring some of them. So in healthcare, I don't see a challenge of exits as of now around this problem. Anybody who is building around lifestyle related problems, these are on the rise in urban cities. So I don't see that as a challenge. But I know people firsthand who have gone for full service IVF. I know people who have gone for females who have gone for freezing their eggs. So I see a demand for this rising in tier one, I think in tier two cities also now. Please subscribe to our content and share this with anyone you think uh, who may find this useful. And we'll come back after a couple of weeks. We will discuss again, and we will also come back with this plan for this quarterly roundup. Yeah. Thank you so much.